Federal Reserve Chief Ben Bernanke saying that central bankers remain prepared to act if the economy continues to falter. We've been listening to Ben Bernanke's testimony all afternoon. Let's get some reaction from Dino Kos, Managing Director of Equity Research at Portales Partners. Dino Kos is also the former Executive Vice President of the Markets Group at the New York Federal Reserve. Dino, good to have you with us on Bloomberg. What did you take away from the Federal Reserve Chief's comments? There was a lot of, quote, uncertainty that he talked about in terms of the economy. Was that the real headline?
Well, I think the market has been talking itself into a very bearish perspective on the economy the last few weeks, and a lot of people were looking for him to suggest that maybe the Fed might be moving towards some kind of an easing or reviving some of the moves such as asset purchases that had been doing last year. And the testimony didn't really have that. And the testimony was more focused on exit strategies, what the Fed might do to pull back from excess reserves. And I think that's what left the equity market a little bit disappointed, and that's, we had to sell off as soon as the testimony was released. So I think that was the main giveaway, was a mismatch of expectations versus what they got.
Talk about this idea of asset sales and asset purchases. What do you mean by that when you talk about how the Federal Reserve would actually use some additional policy levers?
Well, of course, the Fed funds rate is now at 0. So that's the most important lever, the most powerful lever that the Fed has, is to lower interest rates. They can't do that anymore. So then the question is, well, what else could they do? So one thing they could do is expand their balance sheet, create more reserves by buying more assets, so buying more treasuries, buying more mortgage-backed securities. And that's what they did, in fact, last year for about a year. And so they finished their program at the end of March. And so one possibility might be that they could revive that program.
Do you think that's likely? I mean, with mortgage rates at record lows?
Yeah. Well, that's the issue. So how much bang for the buck will they get? That's one question. And there's a lot of skepticism about how much further can you push down mortgage rates? Maybe not that much, because they are at record lows, and we really have not seen the spike in activity in the housing market or the spike in refinancing that people were expecting. There's a lot of question marks, and the chairman really did not give a hint that they were moving in that direction. So that's clearly one area of disappointment. Now, having said that, I think maybe the market is getting a little too gloomy, a little too bearish. There's a lot of mixed data out there. So we at Portales we follow banks and financial institutions, and actually the reports that are coming out right now this quarter suggest that actually credit is not deteriorating. It's actually at the margin, maybe even improving slightly. We're seeing some banks reduce their reserves. We're seeing the inflows into new non-performers actually slow down. So
wasn't that the reason why a lot of the bank results were so positive, is less money set aside for bad loans?
Exactly. And so if we were on the verge of another downturn in the economy, I would have expected to have seen those metrics actually deteriorate, and in fact they improved. So it's possible that the market again is getting a little gloomy without maybe looking at all the data.
So when you take all the data together, I mean, do you think that we're going to have another recession? Because Federal Reserve Chief Ben Bernanke today, he kept having to remind the senators that the economy, as sluggish as it is, it's still growing.
Well, of course, we will have a recession at some point, but the question is, are we going to have a recession over the next few months, the next few quarters, which would qualify as a double dip, or if we have a recession in several more years, well, that will be a normal cycle. So, I'm still a skeptic about a double dip. I think that there's enough momentum that we do not go into another downturn. But that doesn't mean that we're going to have fast growth. It doesn't mean that the unemployment rate comes down. We have to remember that there is a lot of deleveraging that the consumer has to go through, government, state and local especially, has to go through, and that's going to be a headwind on growth for a long time.
All right. I want to thank you very much, Dino Kos, coming to us, Portales Partners, giving us a view of Ben Bernanke's testimony and what might be ahead for the economy.